Good afternoon to everybody in India, and for those of us who have joined us from elsewhere, good morning or good evening. I'm super excited to invite you to the second launch of our investment report. This is the second time that ThinkAg has been doing this. For those of you who are not familiar with ThinkAg is a platform that has been working with stakeholders in the agtech ecosystem and innovators to accelerate innovations in the ecosystem. We do a whole bunch of things from liaising between startups and larger entities to see how partnerships can be formed. We run a whole series of events we call Ag Clinics that do deep dives into different aspects of issues and challenges and changes that are happening in the Indian ecosystem. We work with very young startups. We work with much more mature startups. So that, as you can see, there's a range of folks that we work with. And the objective here is, how do we get more of this happening? How do we get these to scale and work at a much larger base that happens? So every year we've been doing a investment report, which looks into the investments that have happened in the past year. Majority equity, but some debt as well, is what you will see and hear about in the report. Yeah, we do both a quantitative deep dive as well as qualitative conversations with various different stakeholders across the ecosystem. So stay tuned, and you're going to hear more about what happened over the past year, and more than that, the team thought is going to happen going forward with all of the things that we heard and we saw here. This year, we have planned more than this launch event. We've also planned a whole series of events here to bring some of the voices that we had deep conversations with live, including the corporates, including investors from outside India and how they view investments into the sector in India, and including global startups that are spreading their wings and moving beyond their borders here. So stay tuned, and we'll have a bit more of interesting conversations upcoming here. So we've been very lucky to have sponsors that believe in this space and have been very generous to help us put this report together. So I would like to take this opportunity to thank Rabobank, the Asian Development Bank, and Bayer Crop Sciences for their support of this report. And we have folks who you will hear from, about their thoughts on the agtech investment landscape here. So just stay tuned. But last but not the least, I want to thank the team who has worked really hard to pull up data, verify data, put stuff together despite COVID waves. So a big thank you to the entire ThinkAg team for helping pull all of this together here. So I'm going to kick off by inviting Arindam Datta, who probably doesn't need any introductions. But Arindam is Executive Director and Head of Rural and Developing Banking Advisory at Rabobank. Arindam is a champion of agtech innovations, and Arindam has been in this space for over the last 28 years, 15 years of which has been with Rabobank. He's passionate about agtech developments, and especially its significance for smallholder farmers. Arindam, over to you for a few words. Yeah. Arindam, do we have you here? Okay. I thought he was right here, but perhaps he's not quite there. Let's wait for him to come back. And in the meantime, I think I see Shervin here. So Shervin is the unit head of business development, private sector operations at Adb. And Shervin has also been a pioneer, sort of getting Adb Ventures off ground and very focused on taking a look at the agtech innovation space. Shervin, would love to hear a few words from you.
Thank you very much, Ritu. Can you guys hear me?
Yes, we can.
Okay, good. So greetings, ladies and gentlemen, and distinguished guests. I would like to thank Ritu and Hemendra for inviting me to join today's session. And I also would like to congratulate ThinkAg on the launch of another excellent report. 2 reports in a row. I think that's really remarkable. Agriculture employs, as you know, that almost 1/3 of the Asia Pacific region's workforce. Yet challenges of food security and agriculture sustainability around. Because agriculture is heavily dependent on climate and natural resources, it's particularly vulnerable to the effects of climate change, including more frequent and intense drought and natural disasters. Meanwhile, 43% of the land is degraded due to overfarming and overuse of fertilizers and pesticides. The region's growing population drives demand for food and water, but food production will continue to be constrained by limited land and natural resources. The challenges don't end there. Unfortunately, even after it leaves the field, more than 30% of the food produced in the region is wasted. So improving the logistics necessary to deliver food fresh from farm to fork is a stubborn challenge. The Asia Pacific urgently needs sustainable and less carbon incentive solutions for agriculture, solutions that are good for our region's smallholder farmers, the agri-food industry, and for all of us who need good food to thrive. ADB has long been committed to vibrant and sustainable agriculture, but the Adb Ventures, which I co-founded and represent, is a new approach of development financial institutions. Adb Ventures has a $60 million equity fund and a sizable technical assistance that we are using to invest in and support early stage companies in agri-tech, as well as other climate relevant verticals. Once invest, Adb Ventures can add value through the ADB's robust operational process, safeguards, extensive networks, and considerable experience as a leading development partner in the Asia Pacific. Through these channels, there will be additional funds to come online over the next 10 years. Our vision is to crowd in more than $1 billion of risk capital by 2030 towards the sustainable development goals. I anticipate that we will spend a lot of that time going to know, supporting, and investing in Indian agri-tech firms. That is because India is turning into one of the Asia Pacific region's primary incubators for agri-tech innovation. You have all the ingredients necessary: a large population, a concentration of commercial opportunities, a vibrant technology ecosystem with many venture capital investors. But we still need more for agri-tech, I would like to say, and a set of challenges that are mirrored across the region, especially the rest of South and Southeast Asia. Throughout the past year, we have been pleased by the accelerating number of market expansion programs dedicated to Indian entrepreneurs. That includes an invitation, which we accepted, to coordinate with Iron Dome, South-South Innovation Corridor, UNCDF program supported by Rabobank that helps Indian agri-tech innovators expand into Southeast Asia and other markets in the global South. As one of the agri-tech investors, I look forward to getting to know more Indian agri-tech entrepreneurs and seeing more exciting Indian agri-tech deals over the coming years. Thank you very much. Back to you, Ritu.
Thank you, Sherwin, for that. I see Orindom is back here. Orindom, could I request you to say a few words? We'd lost you earlier.
Yeah, thank you, Ritu, and congratulations once again for the second Agri Landscape Investment Report. It's a pleasure to be speaking in this event. Now, Indian agri-tech, as has been mentioned, has definitely got the global attention. Now, a recently launched Bain report estimated that 30 to 35 billion of value pool will be created in the sector. Now, that's pretty big numbers. I think the investment made by Tiger Global a couple of years back, they wrote a check of $89 million to Ninja Card. That was, I think, one of the landmark deals in the Indian market. And I'm sure this report will give a very good perspective of what kind of businesses are being backed by the investors, whether it's agri-tech, which is near the farmer, or it's food tech, or it's consumer tech. Now, it's again very, very important that to pause and understand whether digital technology is solving the real problems of Indian agriculture. I'd just like to briefly mention three sets of problems. The first is around creating inclusive value chain. That is, do the smallholder farmers figure in the scheme of things for the digital solutions, and do they benefit from better access, whether it's access to markets, access to inputs, knowledge, infrastructure, etc. And can they extract a higher value for the work that they do? The second is around the climate challenge that we are facing. It's not a debate anymore. And can digital solutions play a role in addressing the issues that we are facing around water, weather, and soil? That's critical for the growth of Indian agriculture and for the nutrition security, not only of India, but for the world. And third is the access of financial services. I'm not only talking of production loan, post-harvest loan, or investment loan by smallholder farmers or other supply chain players, but also risk mitigant financial services, whether we are talking of financial products which address production risk or market risk. These products are available for other kind of sectors, but can digital technology enable that for smallholder farmers? Now, my sense is all these issues to be addressed, technology will play a very, very important role. It's a necessary condition, but the jury is out on whether we are addressing these issues. And I'm confident that in India, if we do find solutions which are scalable, they can not only solve India's problem, but the problems in Southeast Asia and across, say, Africa and other countries which have similar agribusiness characteristics, one of fragmentation with very high risk and transaction cost of doing business. Now, I would like to thank ThinkAg once again, and I do hope that the report generates more interest to be able to deepen and widen the capital infusion and get in different class of investors into the Indian market, and also importantly, get other ecosystem important players like the food and agri companies, the agri infrastructure companies, the large financial institutions, and the policymakers also more interested in the sector, because they all form the ecosystem around which technology can thrive. Thank you so much, Ritu, and all the best to ThinkAg.
Thank you very much, Arindam, and thanks again to Rabo for their support of the report. I'm going to hand over to Kohi, who's the Digital Incubator Lead for Asia Pacific, the Crop Science Division Bayer, covering all Australia, New Zealand, China, South Asia, Northeast Asia, and Southeast Asia. Kohi, over to you, and would love to get a few words from you on the landscape that you see. Thank you.
Yep. Thank you. And first of all, congratulations to ThinkAg, about this great report again. And we are so privileged and honored, to sponsor and join this initiative. And I also had a privileged opportunity to take a look at the report a little bit faster than others. And I'm very, very happy to see a mega trend from a mono discrete solution focus to a much broader integrated solution focuses in the broader industry, of agtech, to really address those pain points across value chain, which is already said by other speakers. And let me quickly share why Bayer is motivated or happy to see such kind of move today. So we, as a leading industry player in ag input, seeds and crop protection, we have a strong commitment to smallholders. To empower 100 millions of smallholders until 2030. This is sustainable commitment. And in addition, in India and all these other smallholder markets, smallholder customer success is purely our business success. So we want to drive those agtech digital solution to enable productivity increase or to combat all the climate challenges for smallholders to improve their lives. And also, we are true believer of this open innovation, collaborative, and ecosystem approach to really crack the code. Because I mean, without the collaboration, it's extremely difficult. I mean, to bring a real solution to farmers. The reason first is there's a strong kind of need from farmers. I mean, imagine if there are lots of solutions coming onto the farm. Farmer needs to use drone solution from one company, disease prediction solution from the other company, and then like a sourcing function or like a crop trading solution from the other company. So they definitely need to have a more integrated customer experience. Although like each solution can be provided by different providers, there needs to be some sort of a compatibility. And that leads to the second point that like in this industry, like challenges are so fragmented and too many. I mean, India is diversified almost like a continent. I mean, there are lots of hyper-local ecosystem challenges. So one company cannot resolve. In another country, in another industry, I think, I mean, there is a scenario that like one big tech giant, I mean, can like become monopoly or dominant, I mean, as a platformer. But I'm not believing that scenario in agriculture because of this nature. And the third, agriculture still is industry which requires lots of work on the physical. So digital solution can never replace physical work by farmers. I mean, of course, including mechanization, but still, like it cannot be pure digital, unlike financial banking. So with all reasons, we need to work together, private, public, domain lead by domain lead, incumbent or big corporate like us and the startups, investors and the financial institute and the entrepreneurs. So Bayer is super motivated to shape and join those ecosystem development together. And we are happy, I mean, to work with all opportunity, I mean, we have today. And I'm really excited to see more and more to come. So I'm really looking forward to further discussions and panel discussions today. Thank you.
Thank you, Koi, and thanks to Bayer for their support. And I think working with corporates like yours is pretty critical for a lot of innovators and how they go to market and they scale here. Without much of further ado, I'm super excited to say we've got over 210 people here on this discussion, which I think is amazing in the Zoom fatigue era that we live in. But I will hand over to Raman Ahuja, who's one of the co-founders of ThinkAg, to kind of walk you through the top-level learnings of the report. So stay tuned to find out whether they were headwinds or tailwinds and where we are headed here. Raman, over to you.
I guess I should unmute myself. Thanks a lot. Thanks, Ritu, and big thanks to our partners in this journey, Rabo Foundation, Bayer Crop Science, and Adb Ventures. The 2021 investment report has been the outcome of a collaborative process where many of you to improve on them with your feedback and support. Orindam, Sherwin, and Sakata-san have set the stage for a lively panel discussion. In the next 10 minutes, I will share the highlights of ThinkAg's AgTech Investment Landscape Report, which will hopefully contribute to the discussions today and also lead to a deeper dialogue in the coming weeks and months. The launch of the second edition of this report gains enhanced relevance with the recent release of India Digital Ecosystem for Agriculture, known as IDEA, a consultation paper by Ministry of Agriculture, Government of India. At ThinkAg, we will continue to work with all stakeholders to share our inputs as this framework is developed. We believe this is potentially a milestone effect in the development of the AgTech ecosystem. The slowdown in AgTech investments in India can be attributed to some extent to a pause in deal-making activity during the ongoing pandemic. Globally, AgTech investments grew by 50% in 2020, particularly true for the US, which grew its proportion of global AgTech investments, breaking the trend of the past few years. The pandemic has accelerated adoption of digital tools across sectors and income strata. This should have a positive impact on the fortunes of AgTech companies as well. Last year, ThinkAg had predicted growing investments in downstream AgTech and AgFintech. While the former has grown in prominence during the pandemic, AgFintech has seen very few new entrants and low investments in the year gone by. While the need for ag fintech solutions remains significant, as already pointed out by Arindam, it is increasingly being serviced by existing ag tech companies who are adding a financing layer to their core operations rather than as a standalone offering. The categories on this chart identify the core areas of operation for Indian ag techs. Many players are now blurring these lines by dabbling across multiple parts of the agri value chain. This is an evolving space. As service and delivery becomes increasingly differentiated, we may see new categories emerging or the boundaries getting sharper. Unique deals account for a consistent proportion of deals since 2019 and slightly higher in value. As expected, majority of capital flows have gone into follow-on deals. Interestingly, the subsector breakdown, which is on the right side, of first-time deals is fairly similar to that observed in follow-on deals, with the notable exception of ag input supply chain category that saw higher proportion of first-time deals, indicating increased experimentation with novel farm proximate models. A few startups in precision ag tech and ag automation categories raised funds, though these fell below the threshold value for including in the analyses. While this partially reflects the low capital requirement of these two categories, it also highlights investor apprehension while backing yet to be proven models. Various indicators point to growing maturity in the Indian ag tech sector. Though investments fell overall, investments in higher end funding brackets, which is above 5 million, grew in 2020, shifting the median investment up by 50% since 2019. Ag techs that raised the largest 10 deals took an average 2.8 years since their first million raise to do so, as compared to 4 years for the corresponding group in 2019. This suggests that models are able to scale or grow at a faster pace than in the past, and therefore access larger caches of capital. Sector agnostic investors are rapidly growing their participation, signifying the sector's attractiveness. This is in the pie chart that you see, it's the light green shaded area. Apart from Adb Ventures, which is represented by Ranjan on the panel today, which is an ag-focused fund, all the new sources of venture capital in the sector have been generalist funds. New players are entering the space to make late-stage investments as well, such as Ascent Capital, Temasek-backed PE firm ABC World Asia, South Korean PE Stick Investments are some examples. The sector is also witnessing new type of corporate strategic investments from e-commerce giants such as Walmart and Alibaba, which see food and grocery as a critical part of their business journey in India. Corporate venture capital flows from traditional Indian agribusinesses continue to remain sparse. Investments in agtech in India largely come through equity funds, with non-equity funds from venture debt and conventional sources accounting for less than 5% of total investments. Though much lower in proportion, venture debt investments tend to follow equity funding and so have fallen since 2019, even though debt from conventional sources increased over the same period. Currently, there are few options for early stage agtech startups to raise investments without diluting their equity. The low level of non-equity funding in the sector has all been channeled towards agtechs with mature business models. The fragmented nature of agriculture supply chains is encouraging the more mature agtech startups to develop full stack solutions that provide a bouquet of services to one or more stakeholders. Full stack is a term where you have a full menu option and you can choose what you want to do or a combination of services that these players are offering. The names of the firms that you see on this slide are representative and they're not necessarily signify the limitation in this segment. B2B software as a service models are more often seen with point solutions in the precision agtech category. Their plug and play nature enables them to scale effectively through partnerships with other agtechs in the ecosystem, as well as explore global markets. The inefficiencies in the Indian supply chain, the highly intermediate supply chain, I must say, intermediated supply chain, create fertile ground for tech-enabled supply chain solutions that bring traceability, contribute to reducing food loss and waste, and improve quality of produce, with a promise of increased income for the farmers. Application of fourth industrial revolution technologies is now slowly becoming visible in the Indian agtech sector. On the other hand, product innovation, particularly in the realm of ag biotech, is completely absent, largely due to the absence of a developed ecosystem to identify and nurture pioneering solutions. There has been limited or no innovation in agrologistics. In our report, we do a case study of Pinduoduo, China, that has leveraged the existing logistics players in the ecosystem to actually create a very new model, which has gone well beyond Alibaba. High costs of accessing and onboarding individual smallholder farmers, coupled with smallholders' low risk tolerance, poses an uphill battle for agtechs to connect with smallholders. Startups identify a strong need for a physical on-ground presence to build trust and augment adoption among smallholders. Driving adoption of agtech offerings among this segment of the farmers is significantly determined by the solution's ability to improve their access to higher incomes, and also demonstrating that this is indeed being done. 4 key things emerge from ThinkAg's survey of stakeholders in the agtech ecosystem. Agtech startups are pursuing multiple channels within their business models and offering additional adjacent services, often evolving into bundling solutions. Startups view the demonstration of scalability as their primary challenge and in trying to access capital, mirroring the key concern among investors in corporate entities. Investors, constrained by the finite duration of their funds, are also apprehensive about the timelines agtech startups require to attain scale. Corporate players have yet to significantly participate in the agtech ecosystem. However, the situation brought by the pandemic has increased their involvement. Despite some setbacks faced by agtechs in the initial months of the pandemic, the agriculture sector's resilience and the role agtech solutions had in it are driving enthusiasm for the sector. 95% of innovators and 85% of investors surveyed expressed optimism about the Indian agtech sector in the years to come. Looking ahead, as the pandemic-induced crisis stretches on, the need for robust, efficient, and transparent supply chains is all the more pressing. Supply chain innovations are therefore likely to continue in their dominance in the Indian agtech space. The value chains across agriculture, horticulture, aquaculture, poultry, dairy, etc., are all distinct in nature, and the degree of intermediation, perishability, and their demand patterns are very unique. So we will continue to see more and more agtechs coming up in each of these individual subsectors of the larger agriculture space. Opportunities to disintermediate, build efficiencies, and automate across these supply chains will be plentiful, we believe. Platform solutions. A growing number of agtech startups are moving towards offering platform solutions, either through forward or backward integration along the supply chain. And some of them are also adding financing services or farm level precision agtech solutions that complement other offerings. Partnership is a promising way forward. This includes partnerships between Indian agtechs as well as joint ventures with global agtechs, or collaborations with organizations offering financial products like banks to various players in the ecosystem. As the apprehension that led to the investment slowdown in 2020 gives way to a clearer view of the potential as well as the risks present in the Indian agtech system, investors are likely to approach the sector with guarded optimism. Thank you very much for your patience. The report and the presentation will be available on social media and on ThinkAg website. And we look forward to your feedback to take this forward to the next level. And thank you to our members for their continued support. Over to you, Hemendra.
Thanks, Raman, for a wonderful presentation. All I can add that a $400 million in 2020, which was a pandemic year, is not bad at all. We have already seen an upstick in 2021. If you look at the investment in the first 6 months of 2021, it has crossed $300 million. And with the visibility of deals that I have, I'm sure that the year is going to add somewhere between $700 to $800 million. And if you look forward, I'm sure next year could be the first year where we could see an investment in excess of $1 billion in agtech. And if you ask me long term, maybe in 10 years, cumulative investment in excess of $10 billion. So I think with that optimism, I shift over to the panel. We have 6 panelists on this panel. I am both excited and nervous. Excited because I couldn't have thought of a better panel with so much of investment and domain experience, and nervous because I don't think I will be able to do a justice to their experience in next 60 minutes, but I'll try my best. So maybe I can start with a brief introduction, though I don't think any of the panelists need any intro. So very briefly, I can introduce them. We have Jinesh Shah, the managing partner at Omnivore. We all know Omnivore, the first few funds in the country which focus on EdTech, a pioneer in driving the whole ecosystem. Welcome, Jinesh, to this panel.
Thanks.
Then we have Srinivas. Srinivas is the CEO of Willgrow Innovation Foundation. Willgrow has supported many agri-tech startups right from the beginning and continue to do that year on year. Srinivas, welcome to the panel.
Thank you, Hemendra.
Then we have Madhav Tandon. He's the investment director at Umedia Network. Madhav leads the agri-tech investment at UN and has done quite a few already. The notable being Bijak and Farmart, if I can say so. Welcome, Madhav.
Thank you.
Then we have Rajesh Ranjan. He's the CEO of Adb Ventures. Adb Ventures is another EdTech dedicated fund from NABARD. And Ranjan has done almost 7 deals in a very short period of time. So congratulations, Ranjan, for great work that you are doing in the ecosystem, and we welcome you. Look forward to hear from you.
Thank you, Hemendra.
Yeah. Then we have Nitya Iswaran. She's the managing director at Multiples. Multiples, as we all know, one of the most successful private equity funds in the country. And I'm delighted that Multiple is looking at agri-tech as a potential sector for investment. They recently concluded the investment in Licious, I think one of the largest rounds that we saw in EdTech in the recent past. And I'm very hopeful that Licious could be one of the first unicorn that we see in the sector. So Nithya, thank you very much for your participation, and we welcome you to the panel.
Thanks, Hemendra.
Last but not the least, my friend Vamsi. Vamsi has been a tech entrepreneur for most of his career and recently joined Kalari as a partner. And he's looking after investment in agri-tech at Kalari. Hi, Vamsi.
Thanks, Hemendra. Glad to be here.
So thanks very much to all of you for joining this panel. And maybe I can start with Jinesh. Jinesh, you being one of the oldest investor in the sector. What I want to hear from you, Jinesh, is you have been investing in the sector for last 10 years now. If you can tell us, what are 2 or 3 changes that you have seen, in the ecosystem, in the quality of entrepreneurs, in the deal flow over last 10 years? And what are maybe 1 or 2 changes that you want to see going forward?
Sure. I think the 10 years has been quite a fruitful journey and Omnivore's seen its ups and downs. The last 10 years, what really has changed, if I break into the first on the entrepreneurial team, right? When we initially started out, the entrepreneurs used to be more focused on solving a particular product or problem or particular specific problem. Because we just didn't have enough players in the ecosystem, enough players in the part, and even enough investors in the ecosystem. So entrepreneurs focused on solving the product specific issues or point of problems or specific problems we're trying to solve, and create companies around that, right? And fortunately, their effort has paid off and has been able to now create a situation that it has excited quite a few investors in the ecosystem. And as a result, there is more capital available. As a result, the entrepreneurs are now able to focus on a holistic approach rather than just being a product specific approach, right? So that is what the entrepreneurs has changed over the last few years, right? Over the last 3-4 years, that's more specific than before. People are now trying to solve integrated approach problems. Can we solve the holistic problems, or we just instead of rather than focusing a particular problem? The quality of entrepreneurs was great in the past. It's still getting better, and I think the more and more risk capital coming in the sector, I think I see no challenge in the quality of entrepreneurs improving over a period of time. And also, the entrepreneurs of today have the advantage of what the entrepreneurs in the last 5-6 years have done to learn from them and then evolve over a period of time. So that's how the entrepreneurial things has changed out. In terms of ecosystem, I think that's has changed phenomenally in the last 3 to 4 years, right? I mean, when Mark and I started Omnivore, we were the sole flag bearers. I think you and Hemendra, you were with CF, right? I mean, two of us were the only guys talking about agri in those days, right? I mean, and agri and equity investments, right? So, and today I think it's much vibrant. I think we got quite a few generalist VCs. I mean, we all on the panels. I think everyone's talking of agri investments. We got NAB as a 100% dedicated VC fund in the agri sector. And we are seeing more and more private equity players talking up with us, trying to get into larger deals. So this investor ecosystem is getting bigger, better, and more richer. I think hopefully this will throw up more capital, which would encourage more and more entrepreneurs to take this plunge in the agri-tech sector, which is very crucial for all of us. And in terms of the deal pipeline, I think that was the third point. I think the deal pipeline is getting better by the day, right? I mean, when we started out as a fund, we used to be like hunters, right? We used to go out in the fields trying to find out a particular company and convince the entrepreneur to make an investment. I think my colleague Shubhadeep, who is now partner at the fund, has probably traveled most of the country in the trains to figure out where good entrepreneurs are available, and we used to take bets on that. And today, I think it has reached to a stage where deals flow comes to us via all potential means in terms of emails or LinkedIn's or any other way. And the number of deals what we are seeing per week is like at least 5 to 6 deals we see per week within the team. So on an average, seeing 350 deals a year is not a fast stretch. So that is what really happened around it. And the quality of deals, the amount of money the entrepreneurs are asking at the first point. I mean, when I remember when we used to talk $1 million, $1.5 million, 7-8 years ago, that used to be a huge amount, right? I mean, that today is like a seed investment. I mean, that's what entrepreneurs, the demand for capital has changed out. And I think it's easy to get more capital today. So that has really changed in terms of deal flow and the quality of deals around it. And what you asked me a question, what do I would want to see a change in future? I think one thing I hope that the momentum continues. We see investors who are more specialized about the ecosystem. I mean, just doing 1 or 2 deals is not going to give them a flavor of the agri ecosystem. So people with knowledge in the investment ecosystem who have been exposed to agri sectors, people who have worked in companies in the agri businesses, them coming into the investment ecosystem would really help. I mean, that would be one change I hope I see over the next few years. I hope I have been able to answer this question.
No, absolutely. Thanks, Dinesh, and kudos to Omnivore team for all the heavy lifting for the last 10 years.
Thanks.
Maybe I can move over to Srinivas. Srinivas, you've been working with so many early stage agri-tech entrepreneurs. I think Willgrow has done a phenomenal job, and Willgrow and other incubators also, like CIICO, Increset, Indigram, picking the entrepreneurs right at the seed stage and helping them grow. Now, as the ecosystem is maturing, do you see that the role of incubator will also change, or probably incubator will continue as they were doing in the past?
So, thank you, Hemendra. It's quite an interesting question because I have slightly contrarian view to Dinesh. In a sense, I think it's matured in some areas, but there are a significant number of areas we barely see action. Yeah, and while we're excited that we moved from 1 million to maybe a few millions, the kind of opportunity that the Indian agri sector has is far larger. Right? And, if you're talking either just plant-based produce, or if you're separately talking about the dairy chains and animal husbandry, or even further on in processing, if I were to compare to places like the US and see the kind of deals which happen, I think we have matured in certain aspects of certain kind of business models, but I think we have a fair amount of way to go in different other spaces, right? And I know, for example, early on, Willgrow used to work with a whole bunch of early stage startups. Even till now, we do. But till date, we have only one Skynet, And folks like an Ecozen are still far and few between. So while linkages have worked, have we seen some disruptive technologies even in things like storage systems in financial products? Are we improving value chain financing? I think there's still a lot of opportunities where we can really reimagine, and that's why today people like us, the early stage, who can really take the risk, to discover these fundamentally new kind of working, new business models, new inventions, and then nurture them such that they can tomorrow become mainstream. So to answer your question in a sort of long-winded way, we have to move beyond where it's become mature. We have to see where the gaps in the ecosystem exist, right? What are the new kind of inventions coming out there, and how do those inventions fit into the market? What kind of sciences or what kind of business models, financial solutions are required? So, for example, Wilgrow is trying a whole bunch of pilots in inclusive finance. We're trying to do whether we can drive end user financing. We currently run a product on a guarantee product such that early stage startups who can't access working capital and other short-term debt, we reduce the risk for a lender to give them money, right? So the role of an incubator will evolve. It's definitely not going to be what you saw even 5 years ago.
Right. Thanks, Srinivas. I think contrarian views are always welcome, and I agree. You've come a long way, but still a long way to go. Okay, with that, I'll move to Madhav. Madhav, I think one of the findings from the report, and I think most of us are also witnessing that one of the part to scale is platform. And the reason is that the cost of access to farmer is extremely high. So if you are selling inputs to him, might as well buy. If you're buying from him, might as well finance. If you're financing, might as well store and might as well process and blah, 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 right? So how do you see sort of platform as a strategy to growth for startups? And given the fact that you've invested in companies like Bijak and Farmart, which are moving in that direction, so I think your views on a platform strategy would be very helpful.
Yeah, thank you. So I think that's an interesting question. So if you actually look at two other investments of ours that are closed, but just in the process of being announced, Krishify and OTP, you will notice a common sort of thread across them in which they are all building some kind of differentiated distribution. And by that, I mean essentially the ability to scale very fast and reach many kinds of users across the ecosystem in a very short period of time. Bijak was an example of that. Essentially, it's again, marketplace first approach. And Farmart is similar, using the agri input retailer as a sort of channel and creating a distribution network. In the case of Krishify, it's a farmer-led sort of community for agri sort of stakeholders in the ecosystem. And OTP uses resellers as a distribution channel to sell fruits and vegetables sourced from farms directly to consumers, right? So if the common thread across all of them is building is a distribution first strategy. And what we think is anyone who, so I'll take a step back and talk about Umidiyar's DNA, right? It's really about using technology that can scale really fast and impact millions of people. And what we think is that if you're following this distribution first approach, you can scale really fast, acquire users at a relatively cheap cost, and then you can figure out ways to monetize them, right? So some of these companies have sort of, I would say, they have managed to scale fast, are already showing strong signs of product market fit. And however, the sort of the risk to that is that you need to be a little bit more patient with monetization. However, as we've seen in the consumer tech world and the SMB tech world, you are able to monetize, provided you have a viable strategy. It makes sense to delay that and scale up as fast as you can and go as big as you can, and wait till you eventually monetize, right? So OTP is of course is an outlier there, but I think OTP in the sense they're again I think all the common thread across them is to build a distribution platform and then layer in different products and services. For instance, Farmart actually reversed the entire problem on its head by using retailers and not selling to them, but using them as a sort of network of sourcing agents, which has worked out reasonably well for them. Bijak, of course, using building a marketplace for traders. Krishify, again, for a LinkedIn for farmers. It's a community, and they will again build distribution so that brands can ride on top of that, SMBs can ride on top of that, and reach these farmers. And OTP, of course, building a reseller network in which different products can be pushed across to consumers, right? So that's we've given, again, it comes back a little bit to the kind of the businesses that we like, that have we've seen in the consumer tech space and the SMB tech space attract attention of mainstream investors. For examples would be Khata Book or Misho, and we are trying to replicate the learnings of some of those into our agtech investment thesis, because those are businesses that have managed to scale really fast. They have managed to attract users at a very low cost. So both things are important. So which is why we like this kind of platform first approach. But of course, the risk in some of those is that you may delay monetization, but we are willing to take that risk.
Thanks, Madhav. I think, yeah, I remember those days when agri-tech startups had no option but to monetize day one because there was hardly any capital. But yeah, fortunately, there is capital.
One more thing, Dharmendra, is if you notice the common kind of thread, we avoid farmer as payer models. We prefer giving money back into the pocket of the farmer versus taking money from them in any way. And that has, I think, at least so far, it has worked out. Because so that's one more thing that I would add. We really avoid farmer as payer models. So giving money back to the farmer versus taking from them, to me, was always more interesting. So that's one thing more that I'd like to add.
Well, that's interesting. Yeah. And in fact, if you look at the entire ecosystem, I think direct to farm model is probably 10% of the universe as of now. I hope that will change. But you're right that B2B2F is continued to be the approach for most of the entrepreneurs. Thanks, Madhav. I'll come back to you. I'll move to Ranjan now. Ranjan, I want to hear from you. You need to tell us how you did the 7 deals in like 7 months. And I think more than that, what's Adb Ventures strategy and being part of NABARD ecosystem. I'm sure you get a lot of leverage because of that. So how do you sort of help entrepreneurs post investment in particular, given NABARD's extensive outreach? I think FPO as a go-to market strategy is evolving, and NABARD has access to all possible FPOs in the country. So if you can throw some light on this, that'll be very helpful.
So first of all, Hemji, congratulations to the ThinkAct team for the second AgTech investment report. And it's an honor to be part of this August gathering, the so-called Agri-Tech Intelligentsia or Agri-Tech Mafia. Right? So first of all, I come from a very secretive hedge fund. I used to work many years back at Q Investments, very secretive, 55% of the capital coming from partners and employees. So huge amount of skin in the game. So here we have NABARD as 40% of contributor in the fund. So there is huge amount of skin of NABARD in the game. And I'm a big fan of Warren Buffett in the sense when there is blood on the street, we get down to work actually. So last year, 2019 we saw was a very frothy year, absolutely crazy amount of valuations, startups throwing any sort of numbers on revenue multiples on which I have never done deals ever before. I used to come from hedge fund and private equity world. So we waited for our time, and thankfully, pandemic, even though it caused personal loss in the family, but it was like a godsend for investment from an investment point of view. So there was a lot of fear in the street, and we actually wrapped up 4 deals last year, and we've done 3 deals so far this year. 8th is happening next month. We'll announce it. So what we have a keen sense of value, in investments, and we ride on the shoulder of a giant called NABARD. In the sense, we have access to more than 5,000 FPOs in the country, and that's like a ready-made customer base for startups. Absolutely. So from a go-to-market perspective, it's a huge advantage for any startup that we choose to back. And during the pandemic, we also saw the emerging D2C trend, right, caused by the behavioral shift in consumers ordering online or moving to online platforms. So we have chosen to back D2C. We have chosen to back Unnati, which is into the full stack in the truest sense, from agri input to output. Less of output, I would say, but certainly more of agri input, because that's where the margins are. So we've been very cognizant of not backing companies which burn a lot of money. They are hugely unsustainable in an environment where liquidity will increasingly become tight whenever US Fed chooses to move the interest rates up. So if Fed moves the interest rates even by 1%, all startups whose models are built on high burn will catch a cold, will catch fever, will be in ICU. So that is why we have chosen to back players who are not, indulging in too much of burn. So that's been an underlying theme. And of course, we have, given the FPO advantage, regional rural banks network, SHG network. So we have been tapping. Our theme is centered around that. That if we are not able to connect to the FPO network, SHG network, or leverage the financing network in rural areas, including cooperative or primary agriculture credit societies, we will not do a deal. So that's been a huge advantage, that we not only bring capital, but it's a capital plus approach, in the sense capital plus ready-made backend, so to say. That is really helpful.
Sure, Ranjan. And my request to you that all funds will need your network and NABARD support. So please.
Always
please,
welcome. Happy to partner with like we have partnered with Omnivore on Krish Tantra. Happy to partner with a lot of other funds, and we are increasingly doing so. We don't have a penchant for being the lead or something. We are absolutely happy being co-investors, number 2, number 3 in a deal. Absolutely. But the point is to get to as many good founders as possibly we can. So more than the startup, I think it's the founders who are more important to us. So we absolutely love to work with good guys, honest guys.
Thanks, Ranjan. Thanks for that. Maybe I can move to Nithya now. Nithya, if you look at the investor profile over the last 10 years, the whole sector initially got money essentially from impact investors or agri-tech investors like Omnivore, right? Then we saw Sequoias and Excels of the world, getting into the fray, essentially generalist VCs who came in. And now it's good to see a seasoned private equity fund like Multiples looking at the sector, and you've already concluded a couple of deals. So just want to know from you, do you see enough deal flow being a late stage investor? Of course, early stage, as Dinesh was saying, deal a day, that's the mantra. But for late stage investors, do you see enough deal flow?
Yeah. Hemendra, first of all, thank you for inviting me. I'm an understudy here in this space, in the company of very experienced investors in this emerging space, and we've been an understudy for a while. I was just reflecting back before coming to this session on over the last 10 years as Multiples, how have we touched this space? And it may not qualify as ag tech, but it has definitely allowed us to touch the space and appreciate the difficulty. So we had an investment in a rice milling equipment company called Miltech, which we made in 2012 or 13 in that space, and that gave us, and with that, a lot of us traveled actually into closer to the farmlands, and where the rice milling the players were. And as that investment played out, I mean, we could really appreciate the problems with that investment, right? And it was a long hold investment for us. Volatility in incomes, even for the food processors, coming from weather, and changes in policy and so on. And that took away 2-3 years. What we thought originally was a 4-year investment ended up being a 7-year kind of an investment for us. And difficulty of arranging financing for the chain, right? So one of the things we all know that any equipment, you normally have equipment financing go with it, and that helps you, scale up your business. And difficulty of arranging that financing was so it gave us a lot of, and of course, removing, and kind of working with intermediaries. And it was very difficult to work. It was very difficult to not work with them also. So from there, I would say now, we also saw in between there was a spurt of all these collateral, management and warehousing companies. There was a spurt of those investments which were there, which we decided to take a pass on at that time, but spent a lot of time understanding that. So I am actually currently in my last few months that I've been at touch base with you, with Jinesh, who's here, a few others, and I've been very encouraged by by the kind of deals which are now coming, which I find are solving some of the issues which are there. Madhav touched on the fact that they'd rather not do a farmer pay, but a farmer a farmer benefit or farmer gains kind of approach. And I think that's where we are also seeing most of the activity, right? Which is basically market linkages, warehousing and logistics, and financing. And all of these look very interesting. And we get our source of deals, from all the players who are here, which is the VC world, which then feeds into players like multiple. So we've been actually putting together all the interesting deals that everybody here and more have been doing. And these are spaces which look quite interesting. So I would say, and quite funnily, other than Licious, which we have now kind of taken the plunge on, and we like the full stack nature of the model. So while it's a food business, but because of its full stack, where they own the processing centers and they're working directly with the supply chain, that's what makes the model valuable. We do believe. We also now have an additional touch point. I mean, you spoke about a late stage fund. Licious for us is actually slightly early, and we do put 20-25% of our funds money in these slightly early deals, because these are coming out of the VC and they are very valuable businesses, and that makes it very interesting for us. But on a late stage deal, we did a buyout of Zydus's animal health business, and we're quite excited. While it's not a technology-led business, but we do expect that through that and through partnerships from that, we'll touch upon a lot of technology-led models as well, where there could be some collaborative working between the animal health business as well and everybody else who's working in the livestock and animal ecosystem, which is there. So I'm quite excited. It's challenging in terms of because of the huge presence of government in many of the sectors, makes it a challenging space to be in. But wherever there are linkages, warehousing, logistics, distribution, BFSI, financial services associated, and a lot of players spoke about platforms. And we like the fact that FPOs are now gaining prominence in kind of pooling farmers and helping access farmers as well. We also like the fact that we're not really trying to replace the intermediaries, but kind of organize the intermediaries. And I think that's a better approach taken, and organize as well as add intelligence to that, to that layer. So some of those are very encouraging trends, and I do agree with many people on the panel to say the reason we are now spending so much time trying to understand and actually get into this space is because I think the trajectory from here is looks interesting. We are still in the zone of improving farmer incomes in one way or the other, or reducing inefficiencies and wastages, which is where market linkages and everything come. And if you look around at what's happening in UK and the US and other parts of the world, they've moved on from there to traceability and provenance and a whole lot of activity on the technology side which is happening there to sustainable farming. And so we have a, if I look at, you spoke about availability of deals. I would say for the next 10 to 15 years, we are going to walk down this space. I mean, we're going to invest here. If I say 5 years later, we'll be probably investing more in traceability, provenance, post that in sustainability. So there's a very long runway that I see.
Thanks, Nitya, for a very long-term view. And clearly, I think entry of multiples in a way completes the continuum. We need to somehow get a soft bank now that probably will complete the loop. So thanks, Nitya. I'll probably go to Vamsi. Vamsi, apologies for keeping you waiting, but we want to hear from you. You've been evaluating so many agri-tech deals. Any views? What are the segments of agri-tech which excites you, and where do you see challenges as Kalari?
Thanks, Hemendra, for having me, and I don't mind waiting because I'm the last into this space to actually start working on agri. So I've been learning with everyone. I think I've just been here for like 5-6 months, coming from a tech background, B2B commerce and all that. The reason I chose this space and it very, very much excites me is the opportunity that it provides and the kind of entrepreneurs I'm looking at, right? So just the past 4-5 months, I think I've seen like 100+ companies, pretty much I think 1 or 2 every day, like what Janesh was mentioning. And really what excites me is the innovation that is happening across the value chain. But I think it's more like, everyone is trying to solve one bit of the problem at a very small level. Now, scaling that up itself is a big challenge because it's such a huge space, right? So, when you look at inputs to precision farming, to market linkages, farm to fork models, and manager farming, I think all these things are being solved for. But again, a lot of things which I'm seeing is as a challenge is that, people cannot really disrupt with technology right now. So it is more about actually going and learning the process and making slight improvements, which means that it's going to take time, right? It's not going to happen overnight. So, so I think that is where I see a lot of challenges. But I think, while we are talking about creating value for the farmer, I feel that, farm to fork models are the models which are actually creating that kind of a value. And just in terms of, folks focusing on, starting at the base roots, trying to educate the farmer, advisory services, which in itself, I think creates an opportunity for something like managed farming and all that models, which actually can improve the productivity of the farm itself. So I think a lot more on the upstream, I would say, needs to go in. And actually, I'm very excited about that space, which is, the farm gates, what's going to happen over there, the innovations that are happening over there, and how people are solving for it, which we always call it as more phygital. So it's not going to happen digital at all right now. So that's what I've understood in the last 4-5 months, that we are looking for solutions which can be disruption. But I really feel that it really needs to be more of an enabler than a replacement, right? So we need to go in there, and technology and companies which are actually going and trying to help the enablement part rather than actually trying to replace the intermediaries or whatever the process in place. I think that's where the excitement lies. And I think lastly, I think it's more about someone who's connecting all these dots, right? So, who's looking at ensuring that, how do we connect all the dots? So a full stack solution seems to be the solution, but, at a scale, we really have to solve for a lot more than that, right? So, so I'm seeing that, those are the challenges. But deal flow wise, I think, very exciting to see that, the amount of, understanding that's coming from the current age entrepreneurs is more about, just learning and trying to grow with the model rather than trying to say, this is not like a regular B2B commerce or social commerce or media entertainment, right? It is not going to happen overnight. So I think just the patience of the entrepreneurs in terms of navigating the waters and trying to, find solutions, because we know that, there is an opportunity, but, it's going to take time. for me, I feel most of the panelists here and the funds that are here have mastered the art of actually going in very early on. I think that's where the journey needs to start, and be with them. So, we as Kalari are definitely excited to, be and focused in this space. As you know, we have a couple of investments like Agnext and Jumbotail, which have done fairly well. So, the success rate has been pretty good in that sense. Of course, working with the partners over here. So I think, those are my thoughts pretty much. But I think we haven't even touched the surface of anything. So I feel that, whatever you said, Hemendra, this is going to be the next big opportunity. And, I would personally spend a lot of time ensuring that, we try and find entrepreneurs and companies which can build solutions.
Thanks, Vamsi. And I'm so glad you mentioned that upstream tech has a lot of opportunities. If you look at the entire capital flow, 90% has been downstream, and likes of Zomato and Swiggy and Grofers and Big Basket. But I think the upstream has been undercapitalized. I always say that it's a sector which suffers from bipolar disorder. Food and agri are seen as two different sectors, not just by investors, by everyone. So I think that is changing for good. I'm sure the fund flow will become much more balanced in time to come. With that, maybe I can go back to Jinesh. Jinesh, a $1 million question, rather a $1 billion question. The mega exit in agri-tech, I'm sure you must have been asked 100 times. So am I. I think more than that, what is a realistic time frame for investors to look at a meaningful exit, and where the exit is going to come from? Is it secondary? Is it corporates who want to buy some of these agtechs, or is it IPO? I don't know how long will that take. Any views around that from you, Dinesh? You're on mute.
Sorry, I was on mute. Yeah, Hemant, thanks for this question. This is something which we answer to a lot of people. Look, I think the answer is also, the exit opportunities also has been evolving over a period of time, right? I look at my first fund, and there are two companies where there is an exit, right? But both the exits are to a strategic player, right? So, but now if I look at few companies which are scaling up very fast, which are able to attract investors, which are able to demonstrate a growth momentum, able to demonstrate a profitable model, and a clear roadmap to scale up and solve problems at scale, I think those are the companies which will see probably an exit via an IPO, or maybe go even further in the journey beyond the IPO as well, right? It's just not IPO is the end game of everything, right? You will see a lot of people going forward beyond the IPO as well. What is exciting is that we are seeing now a lot of corporate ventures, global VC firms which are in the CVC space. They're looking at the agri-tech space. India is an emerging market for them, and they're trying to understand and make investment in that, right? So that could be one option around which we could get an exit. Global players could be one exit. Second is that we are seeing lot more players in the PE and the large stage investors willing to put more money in the sector. So we'll see quite a secondaries happening in the journey of investors. Because let's say an early stage investor like Omnivore, would spend 5, 6, 7, 8 years, right? Beyond that, we have a fund life and we need to pass on the baton. The companies are doing well. There is no reason for the companies to call it a day, but we just would sell our stake to a secondary exit. I think the opportunity to get a first unicorn in the sector is not far. I think it's maybe 12 to 15 months down the line, we'll see unicorns coming out of this sector. It's not far, right? We also need to be cognizant of the fact that the first tech VC unicorn was Make My Trip. It took like bloody 12 years for VC investors to get the first unicorn. Agri-tech is like 5 years old baby, right? We have been doing for 10 years, but which were the investors? It's 5 years. You cannot compare a sector in 5 years and say, okay, you are not compared, the unicorns are not happening. But the time what we will take to make unicorns in agri sector, I'm not considering Zomatos and Swiggies of the world. That's not agri, that's a food tech or a food delivery sector. But real agri-tech will start seeing unicorns happening in 1-2 years, right? So in the first decade of their investment itself, we'll see unicorns. So I wouldn't sweat, but I mean, it's also wrong for us to be compared with the tech-based ecosystem, which is more at least 2 decades ahead of us, right? So that's how I'll put in. I think God willing, we'll also be the first fund to get unicorn exits from our portfolio companies as well.
Thanks, Dinesh. No, absolutely agree. And to me, unicorn in agri-tech need to be redefined. Someone who creates wealth for the ecosystem.
So maybe let's rephrase it, right? When you say unicorn is like really adding value to the stakeholders, right?
Yeah, absolutely.
For Omnivore, farmer remains the key of it. If we're going to make money without farmers making money, it doesn't serve purpose. Yes, we will be richer, but that's not Omnivore stands for it. I mean, we have clear theory of change, and for us, farmer remains the core focus of our universe. So when we look for an exit, we want to see at least million farmers getting benefit from my portfolio company exits.
Right, absolutely. Yeah, if you put that criteria as a, in calculating the wealth created, probably there are already many unicorns, I would say, in the ecosystem. Maybe I can, with that, I can move to Srinivas. A related question to you. I think Dinesh talked about impact on farmers. I think that's a very big question. Of course, agri-tech is great. The ecosystem is evolving. Do you have an experience? What has it done to farmers? So there are many empirical evidences: more income, better water efficiency, access to good quality inputs, data, advisory, insurance, credit. But what's your sense? How farmers have been impacted, and is that enough?
Interesting. Again, I'm going to sound like, because I'm, as everyone is speaking, I realized I'm right at the start, almost like an R&D lab, with Nitya probably being at the absolute end of this conveyor belt. Yeah. So I'm always going to have this very R&D like view. So the short answer is I don't see enough impact, right? Because I think what's happened is the low-hanging fruits are produce where you have shorter cycles, which you can monetize quickly. So you've seen a lot of work in horticulture, F&V, yeah, the 40-day cycles, 90-day cycles. So you start figuring out how you can make those chains work. Second, of course, you follow demand, right? So if you're focusing on linkages and saying you can supply to customers like you and me, you understand motivation. So those businesses will of course flourish. Yeah, and that's where we're seeing maturity. But if I were to go back and look, and because of our work today, a lot of it is on very fundamental. I mean, we almost exclusively support inventors. Are we doing anything to reduce food loss? In another, there are a lot of reports which talk about water running out. Are we doing anything about pricing water? Those are huge questions. What is the stress on the land? The amount of unnecessary inputs which are going in, right? So these are huge questions. You're not going to get answers. And I see, but what I'm very happy, I'm excited about is there are inventors who are working on it. So of course, the solution you're probably going to see it a decade away when it's going to get mainstream. But I'm seeing the glimmers right now, and that's exciting for me. Yeah. But the $1 million question is who's going to support it? Because magically they're not going to come up. In many of the other markets, I mean, I keep alluding to the US because I see a fantastic effort in backing very early stage, big bets, high risks, but technology, science, and think, okay, let's just give it a shot. Here I'm seeing a far more risk-averse approach, right, on trusted models. So we know you're going to make the exit, right? So that's a little disappointing, but I guess everyone has their compulsions in getting a return. So that's going to be there. So I think many of these important questions on ESG, climate change, we aren't there yet, right? They're slowly being asked, but I'm not seeing solution. For example, I was talking to on one.
Shini, you're breaking a little bit. Okay, I think we lost Shini. Maybe I can go to Madhav. Madhav, again, talking about impact, taking that impact narrative a little forward, and I know ON also cares a lot about the, how impact is being created from investments.
Yeah.
What have you seen, in terms of impact on farmer, impact on supply chain efficiency, impact on, sort of reducing food losses, etc., which I think Srini was also alluding to.
So no, I think thanks for bringing this point up, right? I tend to agree and disagree with both things, right? So, and I'll tell you. So I agree that that our theory of change is also centered around being able to increase the value realizations for the farmer. In fact, when we were forming our strategy, I mean, you and I, you remember, we met, and this was exactly the thesis that sort of so farmer centricity, increasing impact for increasing the income for farmers is our top priority, right? And I think what so there's no doubt about it, and that's, if you notice, all of our investments are directly or indirectly helping them earn anywhere from, say, 10 to 25% more, right? So it depends on the different kind of model. And the way we measure impact is reach and depth, right? In certain cases, depth may be higher, but the reach may be lower, and in certain cases, the reach may be more, but the depth may be less, right? In terms of increasing their income. So that's absolutely clear, and there's no question about it. I think in terms of the point that we haven't got there, I would like to give you an example, right? So if you look at logistics impacting gig workers, right? 5 years ago versus what it is today. So how many people did Amazon, Swiggy, Flipkart, and e-commerce employ before money went in and the ecosystem became bigger? I think that's the way I look at this. I think we are in our journey. I think Dinesh mentioned we're just starting. It's only a 5-year-old thing. I think you will see the transformation happen much sooner than you have in other sectors, simply because the way businesses are scaling now versus because of geo, because of COVID, increasing digitization, etc. I think you'll see it reaching the farmer much faster than you have, for instance, you've seen it in lower middle income segments in urban India. So I'm hopeful. I think we're still early in our journey. I think if we have this conversation 2-3 years out, it'll be very different. Exactly the same way if we had this conversation 6 years ago about gig workers in urban areas, technology impacting them, I don't think anyone can question that today, right? Because e-commerce was seen as the top 10 million, and only those 10 million people are there and nobody orders and all of that stuff, right? But today it's dramatically changed, right? So we need to give it time.
Hemendra, you're on mute.
Yeah, sorry. No, Madhav, I totally agree. And I also see a lot of tailwinds. Whenever you travel to village, farmers using smartphones, digital payments catching up. I think there are some data on UPI payments in rural areas. I think that has ballooned in COVID time. So I'm sure, and particularly with government focus on making broadband accessible to all 600,000 villages, I think these could well happen much sooner than all of us expect. So yeah. Thanks for that view, Madhav. Maybe I can go to Ranjan again. Ranjan, 2 of your investments are in D2C, right? Tender Cuts and Prezzo recently. And there are multiple reports on D2C, next $100 billion opportunity across sectors, and fashion and food are like top 2 sectors in that. How do you see that panning out? And what does it take for an entrepreneur to build a D2C brand in food, whether it's meat or fruits or vegetable?
Certainly. No, good question. See, in pandemic times, as I mentioned, there has been a behavioral shift towards online purchases of grocery, fresh fruits, meat, seafood, etc. While a lot of guys on the B2B side actually suffered during like HoReCa segment was closed. So a lot of guys from B2B tried to enter D2C side. But pivoting is one thing and having the D2C DNA is another. So I believe startups need to have D2C DNA to be successful on the D2C side. And coming to Frazo or players like that in fresh fruit or Licia's fresh to home, what matters is supply chain efficiency. absolutely important to have cold chains, shorter holding periods at dark stores so that consumers can get fresh quality. Quality is very important, very discerning consumers you are dealing with. Quick processing, and above all, where players are fumbled is having a very short delivery time, much like Domino's Pizza, right? So that really kind of gives a wow experience to customers, and that makes whole lot of difference if the price point is also right? So I think D2C as a trend will get bigger and bigger for sure. And already, if you look at the landscape, not only at agri, but let's say FMCG brands in food or otherwise, the ITCs of the world and so on, they are already feeling the heat. Their bastion is attack not only from D2C, but also from some of the tier 2, tier 3 brands, right? So it's absolutely imperative for them to figure out how to deal with D2C. So some acquisitions have happened, more will happen for sure. And guys like Frazo, they're not only going to stop at fresh fruits and vegetables, they have already launched dairy products, organic stuff. So that puts them on collision course with the large FMCG food brands. And that's where it will be very interesting to see how this battle pans out, whether, kind of large guys will acquire the smaller players or smaller players will become big, like farm easy guys becoming big through acquisitions. We don't know. So, but certainly one thing is sure, that millennials, the dinks, the yuppies are clearly with the D2C guys, and increasingly D2C is going to become mainstream. So this is an interesting space to watch. And why we like this space is also because you can trace transactions. If I bought from farmer, I'm selling, you can trace transactions, which is not the case with some of the B2B farm produce startups. Regulatory reasons, no traceability there. How do you know that guys are not selling from one startup selling to the other, and everybody is like checking up revenues? How do we know that? How do you trace that transaction? These are some of the challenges which we saw when we looked at farmer impact through B2B. It didn't make the cut with us, so we went to D2C. Absolutely, very simple.
Right. And one follow-on question, Ranjan, in terms of traceability, and I think Nitya also mentioned about it, clearly very important, and at least for export link supply chain, it is extremely important. But do you see traceability as a value proposition to consumer? Is it we are already there, or probably will get there?
I think it is very early days for sure, but from a retail consumer point of view, we have seen in some, like, let's say, coffee brands, the newer D2C coffee brands, Blue Tokai and all, we've certainly seen, and we liked they could map it right to the farm from where they kind of source. But so the point that you touched upon, or your report touched upon, is that transparency in the ecosystem is absolute must to build trust and get more dollars into the system, even at early stage, late stage, mid stage. So I think traceability is not only important from a consumer point of view, it's also important from a portfolio monitoring point of view, from an audit perspective as well, right? You can't be doing forensic audits for a lot of farm produce startups. Can't be doing it. It's not the job of the investor. How do we get comfort there? We have seen enough players in diamond business doing same thing, jacking up revenues. It doesn't, that is not investment for a VC. I could be wrong, but we have certainly deliberately avoided certain spaces, and thanks God for it. I can sleep peacefully at night.
Right. Thanks, Ranjan. And I think D2C, at least in food, is more about supply chain control. Other day I was talking to Nitya, and you were talking about spinach test. Can you provide the same quality of spinach 365 days a year? I think that's where the challenge is, because it's much easier said than done. So Nitya, probably coming back to you, do you see D2C as a scalable model, given the fact that you are already into Licious? And do you think it'll be pure D2C, or will be an omni-channel kind of an approach? I think Licious is talking about opening stores in addition to sort of supplying directly to the consumer. So what's your view on this? Madhav, I'll come to you. I saw your raised hand.
No, D2C will be, and I think.
Nitya, can you be a little louder?
Yeah, I also saw the comments from my last time as well. Several people saying they can't hear me. Apologies for that. I didn't realize. Yeah, I didn't realize that. Hopefully, it's better now.
Yes, better.
Yes. Closer to the microphone. Ranjan also mentioned about, the fact that you need to delight the customer with a 30-minute, 45-minute delivery, because after all, we're talking food here, and that too fresh, right, which is the most challenging. So the D2C plays to that, and I think that's where, whether it's fresh fruit, vegetables, and as well as meat, which some of us have invested in, and control over the supply chain makes it, it becomes absolutely essential. And in a way, the fact that these are phygital, right? You just can't build these businesses just by putting up an online platform, and that doesn't cut it. You have to be deep into where the meat is sourced. Makes it challenging as well as value creating. So D2C, I think, is going to be, obviously we have taken a bet in that, and we are very, very positive about that. We've also evaluated it in vegetables and fruits, and it's quite a challenge. And I think traceability, actually, if you talk about it, it goes much beyond where we are today, right? I'm sure we'll come to a time when, just like Ranjan mentioned in Blow Tokai, not only do we know what farm was it grown at, but what inputs went in there into that farm, and what was fed to the animals. And companies like Licious will walk down the journey. And similarly, it will happen on the farm side as well. And data and digital and everything will help that kind of get there. But it's a long journey to be played over the next 10 years. So I'm excited about it, because I think the customers will demand it, and you can thereby get to a premium customer. And somewhere the monetization model is the challenge, right? In India, it's a very large market, but it's also a value conscious market in general. I mean, so you have the paying layer is very, very thin for premium. And we've seen that in many of the very premium food brands, right? You've seen some of the juices companies, or some of the yogurt companies have kind of stagnated after reaching a certain scale, because you've not been able to grow that very premium product. So we'll have to be patient. I think India will kind of get there, but it's going to play over a period of time.
Okay, yeah, that's a very positive note. Madhav, you wanted to come in?
Yeah, so I just have one question. Maybe this was touched upon around D2C, right? The importance of distribution. Again, I'd just like to of having your own distribution versus writing, because I see this D2C term being, I don't know if the right word is abused, but to me, D2C means having your own distribution and not riding on third-party distribution, right? So I would like to just get someone's point of view, or just highlight the fact, to me, true D2C means that you own your own channel, and just having and selling it on third-party distribution means that you're just a consumer brand, not really a D2C brand. So that distinction I just wanted to bring up and get anyone's point of view.
Nitya, Ranjan, you want to respond?
I can't disagree with Madhav. Only a point that happens again is we are a large country, and I'm now talking across apparel as well as food and all the businesses that we are now seeing. And we are seeing a kind of little bit of an omni approach, also because owning your own distribution is expensive as well. So I see that in cities where you get the density and thereby the economics working, you're kind of owning that. But I think companies are going through a journey in places where not very different from many other sectors that have gone through. So to say that I'll introduce the brand in a new city or a new place, and I may not be able to build it out at that time. So agree with you, Madhav, but I think it's going to be that 80-20, right? I own a lot of it, and I'll keep owning more of it, but the economics have also to kind of work. And that's where I see the 80-20 coming in, to say where it works, it works. But I agree, because how can you deliver that 30-minute or 45-minute promise if you're going to depend on somebody else to give you that logistics support. It's mighty difficult, and even the economics don't work because then you're giving it away. It's like being on the Swiggy. Then the Swiggy knows the customer and not you. You don't have anything with that customer. And brands like Licious pride that 85% of my sales is going to repeat customers. And that's what takes care of the CAC. All of us know that. So even economically, it doesn't make sense to be on that third-party channel. But I guess till they develop the markets, they kind of be there.
And then if you look at the food supply chain, the maximum margins are at two ends. One is the production end. When you're producing seeds, that's where you see significant gross margin, and second at the retail and the HoReCa end, right? So essentially that's what D2C is trying to capture, you know. Otherwise you are an intermediary playing in 10-15% gross margin kind of play. Yeah. I see Raman's hand up. Raman, you want to make a quick comment?
Yeah, just a quick one, and Madhav's made a valid point. Swiggy, I think, recently launched Swiggy Direct, which is for restaurants and others who are taking direct orders and not on their app, and Swiggy doesn't want to lose that business. So that's an interesting play. And I saw a post on WhatsApp about an association of hoteliers and restaurateurs in Kerala who launched their app, in parallel to what a Swiggy and Zomato are doing. So I think this is early days, and I think this space is going to evolve, and consumers at the end of the day will want a differentiated services for the monies that they're paying. So I think this is exciting times, whether you call it D2C or B2C or whatever.
I realize we probably need to do a separate session on D2C. We'll plan that way for sure. Maybe I can go to Vamsi now. Vamsi, you've been a tech entrepreneur, and you have seen so many businesses in agri-tech, and most of us agree 80-90%, maybe 95% is supply chain tech, right? It's tech-enabled supply chain, all said and done. And this whole sort of gamut of deep tech, what we are seeing in maybe some of the other spaces, it is there in agri-tech. It's still very, very small. So do you see any interesting intersection of agri-tech with deep tech opportunities? And which are those areas where you're seeing that?
Yeah, for me, I think, I wouldn't even go to say it's deep tech. I mean, I think we still need to get tech out there first. So I feel that, when I'm looking at, again, I come from a farming background, and, my father has been doing farming forever without any money. So I'm just trying to actually implement all the solutions we are getting from technology perspective in the 2-acre farm, which I have, which is primarily a small land holding for the whole country, right? So I'm similar to that. And in terms of seeing how we can really bring in technology, right? So first thing I've really observed is that the advisory services is where everything starts, right? Because people need to know, what to kind of grow, when to grow, how to grow. This is lacking. The main thing from a technology perspective is how do we educate the farmer, right? So how do we enable that? So one of the easiest ways is, a lot of the people, like as I was saying, enabling managed farming. There was a way, and there is a way still people are doing managed farming in a different way, right? They just lease it out to the other guy and he's doing it and all that at a very small scale without technology enablement. I think what I really see as exciting is when you start putting together all these technologies, from sensors to vertical farmings to water management solutions to hydroponics to aquaculture to micro farms, which we are seeing, and connecting all these things. I think that is where you see that how technology can play an important role, right? In just seeing how we can develop solutions at the farm and at the farm gate. I think that is where I keep focusing on that. Solutions need to be built there more than anywhere else, because I think that is where the disruption is going to happen in terms of improving productivity, throughput from the farm, and that is when the whole value chain, I think, is going to create immense value just from the not for the farmer only, but I think for everyone in the whole supply chain, right? So we are seeing solutions which are actually for me it's very important when I see solutions which are coming from the input side, and just knowing that who's buying from where, right? If I can know that the farmer is buying from this space, then I exactly know what he has bought from there. So then I can clearly say that that is what is gone into the farm. So I can clearly put a traceability without doing anything. It's a simple technology, But someone who can connect all these dots, I think, is basic technology, not even going very deep tech. So I don't think there is a need for a deep tech right now. I think first it's more important to get just basic tech, and which is basic data connecting the dots. So I think that itself is more than enough for us to start with.
Great, Vamsi. I also agree. Shallow tech is good enough for the time being. Okay. So we are over time. Maybe Srini, we missed you in the last few minutes. If you want to complete your thought, Srini, you want to come in?
Yeah, do you want my thoughts on B2C, the supply chain?
No, the where you ended on the impact side. You were saying something, and then.
I'm sorry. Airtel has been playing truant today here in Bangalore. I can speak about it, but yeah, I look a lot, and I'm actually pulling everyone back towards the larger questions, right, on climate change. And when we go back, that this is a fantastic opportunity in the near term, right, and probably even in the midterm. But as we look at a longer term, a decade and longer, the question that we ponder at Wilco today is, how is it going to pan out in the water markets? How is it going to pan out for the way the soil is performing? Right? So what is it? What are the kind of business models that will work, which will unlock capital for any kind of intermediate, but also for farmers? What is going to get these flows going? So a lot of big questions. We see some answers. Very interesting stuff there. So for me, I actually see overall, I'm sorry, I'm pulling a little away from what the last piece was. I see this whole space probably as, if I have to draw an analogy to the automobile industry, you have a few brands at the top, but you have a massive, pyramid below of people supplying technologies, people supplying different, OEM suppliers. So I anticipate a world where there's going to be a lot of these very high margin, profitable, smaller businesses. And a parallel would be like the German Mittelstand, right? And the way they've got into this space, or even how today's supply chain globally is specialized. My sense is over time, each one will find a niche and become really good at it, right? High margin businesses, much better technology. Like Vamshi is saying, today it's just shallow tech. There's very little tech in most of the things we think. Everyone calls it tech, but it's not fundamentally tech. There's very little data that people are playing with. So when the data gets available, when it gets, you have more longitudinal depth there, then probably we'll see true tech and more sciences and more specialization. So I'm very excited because for me, as I see the early R&D days, it's quite, I'm very hopeful.
Thanks, Srini. We have 22 questions in Q&A box, but we don't have enough time. Maybe I can pick 3 and anyone is free to answer. The first question is around, will app-based model scale in rural areas? There's a lot of startups that tried going the app way to reach out to farmers. Many have pivoted. So that's the first question. Second is, what will it take for agri-fintech to scale? What is needed? What are 2 or 3 things that will be required from the ecosystem for fintech to scale? Third question, which I can take, is someone has asked about hydroponics. I think world over, hydroponics and controlled agriculture has picked up quite a bit, but not so much in India. Do we see a future for hydroponics in India? Anyone can take it. Any of the questions. Dinesh, you want to go ahead?
Sure. I mean, I'll take on the first question about the app-based things. Look, in agriculture, digitization is increasing, but we need to understand that this is still involving food and agro-commodities. So you require a combination of fulfillment as well as app-based services, so which is going to work out. Standalone app-based services would be difficult to execute and scale. That would be the first point, right? Second question you asked about the hydroponics. I think, according to me, it's a rich man's hobby in Indian context, right? Hydroponics really works in a country like US, where a lot of produce is happening on one end of the continent and the consumption happens at the other end of the continent. In India, you travel 50 kilometers outside of any urban cities, you get enough agricultural land to produce. So hydroponics might not really work out in India for the next 5 years. I don't know what was the third question. Sorry.
On agri-fintech, do you see?
I think agri-fintech is now starting to see early green shoots, right? I mean, standalone agri-fintech might be a difficult way to pull it off, but if agri-fintech as a part of the value chain is definitely seeing it, right? And we are seeing early green shoots happening. It quite a few companies are scaled up, but I think it's going to happen for sure.
Great, thanks, Dinesh. Anyone else want to make a comment?
I just say that sorry, Ranjan, if you want to go first.
Please,
No, I was just commenting on Dinesh's last point. I think of more than fintech, I think of it as financial services, right? And the tech comes in as an enabler here. And I see a little bit of a parallel between what happened to microfinance and what will happen here. I mean, the biggest fear has been farmer loans, farmer loans getting, into all kinds of trouble with the banks and so on and so forth. And that's what has kept capital a little bit cautious coming in there. And so you do see, you do see parts of it. You do see some players operating there. So I would say the basis has to be, how can I profitably and with it's a business model that allows an ROE of more than 15% at least. Do a financial services business with a farmer without the fear of kind of either the RBI, government, politics coming in and messing around with that business model. And I'm hopeful because microfinance went through that phase and kind of has got far more regularized now. There were times when we saw the Andhra crisis and so on and so forth in MFI, right? And with the same political interference, and that has moved on. So I think that's I think I look at these financial services entities are also possible ecosystem players, right? Because they kind of touch the farmers and fundamental to farmers buying equipment and services. So I think it will happen. Right now, people are cautiously entering and only touching those places where the interference is less, which is again towards the output side, where you're doing the output financing and improving the risk, of the farmers. But I think that's the fundamental question. Till we cannot settle the political interference question, it'll be very difficult for a business model to come in there.
Absolutely. I think that's a good way to look at it. And distribution of financial services itself is a huge opportunity in rural areas. Yeah, Ranjan, go ahead.
Yeah, sorry, having invested in Jai Kisan, I can tell you that, the jury is out whether captive models within, so embedded fintech vis-a-vis standalone fintech. I certainly have put my money on standalone fintech at this point in time. We have seen in the past, let's say in the case of Jain Irrigation and their NBFC, how it's very difficult. Financial services is a different skill set altogether. So what the right way for, as Nityaji pointed out, the right way to my mind would be to kind of get into apart from equipment financing, invoice discounting, and other things, I think the front end part, the commodity trade, the storage, all of that, I think presents a huge opportunity for a neutral, non-aligned player, right? It is not captive to one, let's say, a warehousing company becoming integrated, offering NBFC services also. That is not going to scale up. It has its own set of attendant risks involved. A neutral platform can work across all the players, right? So a Star Agri's NBFC will not lend to Arya and so on and so forth, but a Jai Kisan kind of player can. And apart from agri, because there is a huge amount of concentration in terms of sector, you need to diversify over a period of time into SMB space, rural businesses, and so on. So that is the right way to kind of scale up. So there is hope for a lot of hope for agri-fintech going forward.
Thanks, Ranjan. Very useful point. And I think with that, we will conclude the session. It can go on for maybe another half an hour, but in the interest of time, we'll conclude here. So I thank all the panelists, Nitya, Srini, Vamsi, Dinesh, Ranjan. I think Madhav has just left us. It's been a great discussion. Thanks for all the candid views, and look forward to stay in touch and work with you in time to come. With that, I'll hand it over back to Ritu. Thank you.
Thank you, Hemendra, and thanks to all the panelists again for a really exciting discussion. I think we had a very engaged audience here asking all sorts of questions that we couldn't get to, but I think some of those got answered. So I have to say, Rajesh, the blood on the streets is a comment that stands out but glad to see that led to a lot of activity over the last year. Of course, investors have and entrepreneurs, as we heard, have broadened and deepened. So that's also great for the space. But some gap areas remain, and we'll see how that gets filled out this year. One that I'm pretty excited about, this 2 years of us doing this report, the question on exit. But I know next year we will have a section on that exit. So that's exciting, and hopefully there is more before the year closes out here. I think the panel brought up a very interesting thing about talking about D2C, and I want to use that to tell you about two things. One is, please do go to the report. We have a very, very interesting case study with Pinduoduo, and which is about the ultimate D2C in China and how that is actually working, moving, I think, over $60 billion worth of agri-produce annually, which is a super, super large number, and how exactly that they're doing this. And we'll hope to be able to actually get them on later for having some discussions and see how that panned out in the Chinese ecosystem here. And the second part about it is that as ThinkAg here expands into looking at reports here in ag tech, is what we've been doing for the last couple of years, we are getting a food tech report out. So we should see a little more analysis of the, the food side of things in the food and ag systems in India. So just before I end, the link for downloading the report is on the chat. So please do go there, register and download a report. And also in the upcoming month, you will see invites to the further discussions I alluded to. We've got a panel lined up here to talk about how global investors look at the India scene and the investments and forays that they've made, comparing and contrasting this to what happens globally. We have corporates coming in to talk about both what they see as exciting in the technologies that are coming up, but also how they as corporate venture capital kind of are looking to expand and invest in the Indian ecosystem. We also have, as I said earlier, global startups will be coming together on a panel to sort of discuss their journeys and their scales and their cross-border expansions that they've had here. And last but not the least, as we heard very rightly so, that farmers are very critical, and how does all of this benefit the farm economy and the farmers themselves, to bring in how multilaterals and other agencies are working with ag tech innovators to really get this down to the last mile, and are they seeing the benefits or they're not seeing the benefits. So do stay tuned, and thank you for joining us, and thanks again to all the panelists, and look forward to seeing you in our next session. Good evening.
Thank you. Thank you.
Thank you. Thanks very much.
Thanks, everyone. Thanks, bye-bye.
Guys.